to Daily Insights That Matter. My name is Merlin Susanna and I'm a research analyst from the Informed Investor team. In this DITM, we will talk about the recent decline in commodity prices, and we will also talk about the decline in US GDP being lower than initially estimated. Let's begin. In the last couple of months, the words rising commodities have dominated the media. Of course, the sharp rise in commodity prices since the Russia-Ukraine war was hard to miss. Since June, however, commodity prices are seeing a decline from its peaks. Let's understand this briefly. Commodity prices have fallen from their all-time highs, and after soaring more than 60% since the beginning of this year, the Bloomberg Commodity Index snapped a 6-month rally in June, falling 10%. But the index rebounded 4% in July, but fell again in the first week of August, sliding over 3%. Now, over the last 3 months, Bloomberg Commodity Index is now down approximately 6%. Brent crude oil prices also slid around 20% lower from the peak of around 122 per barrel. So have the commodities such as steel, aluminium, copper, palm oil, etc. Now, what exactly is causing the decline in commodities and what does it mean for our country? Easing supply constraints and slowdown in China and Europe have contributed to the reduction in commodity prices. For commodity importers like India, easing commodity prices provides significant relief. The government would also feel a great sense of comfort because it has already taken various actions including import duty cuts, export control to improve local availability and affordability in the country. Now, we think that when it comes to navigating a global economic slowdown, India may be in a better position. Our substantial foreign exchange reserves and also our strong economic recovery does suggest that the Indian economy is better prepared to face obstacles. Just like rising commodity prices, recession is also a word spread across every media channel. The second quarter decline in US economic GDP was less severe than initially estimated. Unemployment claims also fell slightly below 250,000. Now, the question is, are these signs that the recession fears have slightly moderated? In the US, second quarter revised GDP fell 0.6%, less than the 0.9% drop in the initial estimate last month. One factor was an upward revision of 1.5% in consumer spending, which accounts for a majority of the economic output in the US. Now, when we look at the data, there were upward revisions in consumer spending, private inventory investment, government spending, which were partly offset by downward revisions in residential fixed investments and exports. Now, real GDI, which measures the US economic performance from an income side, also increased 1.4%. This shows that the US economy is supported by a strong labor market and resilient consumer spending. Initial jobless claims also decreased to a seasonally adjusted 243,000 last week from a revised 245,000 the previous week. The 0.6% GDP contraction coming after a steep 1.6% contraction in the first quarter still feeds concerns about a recession in the US. However, we believe the positives for the US economy is the very strong labor market and resilient US consumer demand, which have moderated recession fears. We also think that the downturn is not widespread throughout the US economy. Having said that, there is no denying that the US economy is in a state of uncertainty. The risks US economy faces currently are global economic headwinds and monetary policy tightening. However, in contrast to all recent recessions, the US labor market remains quite strong with unemployment rate at 3.5% in July. So what does these news mean for you? While we keep our views reserved on the outlook of commodity prices, we do believe the recent decline, which could persist in the near term, is likely to provide a relief for the Indian economy. This will have an indirect positive impact on you. We think that the fact that the US GDP declining more slowly than initially anticipated and that consumer spending being strong could dispel fears of a recession. This will have an indirect positive impact on you. While I say this, this is me, Merlin Susanna, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.